Hi, this is Matthew Cratter from Trader University, and today I want to teach you a trading system that works really well in bear markets. Now, the main way to tell you're in a bear market, if you watch my other videos, you already know this, is that you want to look at SPY, which is S&P 500. You want to make sure that it's trading below the 50-day moving average. And you also want to make sure that the 50-day moving average has crossed below the 200-day moving average. So in this chart, the blue line is the 50-day moving average. Red line is the 200-day moving average. And what we got right here is what's often called a death cross. And this is a good signal that we're in a bear market. Now, the other signal, the other sign that we're in a strong bear market is the volatility that we've been seeing. And if you saw the volatility yesterday on December 26th, you know that Dow was up over 1,000 points, which is the most points ever in its history. Now, these very large up days and high volatility are a symptom of a bear market rather than a bull market. Bull markets tend to be much lower volatility. Bear markets tend to be much higher volatility. So the system I'm about to teach you, the trading system, really does profit from high volatility regimes like we're in now. So the first thing, you want to make sure that you've had this crossover and that you're trading in a bear market. And this is how the system works. Okay, so what I show here, again have a daily chart of the SPY, the S&P 500. And down here I've added percent R, Williams percent R. And basically what you want to do is you want to buy the market. You want to buy the S&P 500 at the end of the day on a Monday when the market is extremely oversold and when people are very, very pessimistic. And the way you tell this is true is you look at the percent R, and we want it to be trading, here on TradingView, we want it to be trading below minus 90. And so you can see December 24th, let me just scroll in here. Percent R was extremely oversold. It was trading at minus 90. Now sometimes this, in your charting software, this may be flipped. The 90 may be at the top and the 10 may be at the bottom. This is just how TradingView does it. But you can see here basically I've drawn lines. The top of this purple area is 10 or minus 10. And the bottom is minus 90. So whenever you get below this bottom line, below 90, that's a buy signal. So you can see here, December 24th, we're at minus 99. We're almost at 100. That's about as oversold as you can ever get in a market. So what you want to do is on a Monday, at the end of the day, if you're getting this oversold reading in the percent R, you just want to buy right at the end of the day. So in this case, we would have bought the spiders at the SPY at 234.34. And then you hold them and you play the mean reversion. And this mean reversion usually happens midweek. So the play is basically you buy the SPY at the end of the day on Monday. You sell it at the end of the day on Wednesday. Now, obviously, the market was closed for Christmas. Often Tuesday will trade up or down. But either way, you want to sell this at the end of the day on Wednesday. And you can see how much the percent R is rebounded from here. Now, this was a very good trade this last Monday. We made 5% on the S&P. And if you use futures on this, let me just show you how that would work. So the ticker for that is basically ES. And then you want to look at the March futures, which is where we're trading right now. March 2009. So in this system, we bought it. We bought the market, the S&P 500 March E-mini futures at 2341.75. Sold them on Wednesday at 2468. Captured about 126 points. Now each point is $50, so we made over $6,000 on this trade. And this was an actual trade I took. This works really well in these high volatility regimes. Now, if you'd like to learn a little bit more about this system or learn other bear market trading systems, check out my book, Bear Market Trading Strategies. I put a link in the description notes below, and it'll give you a little bit more about the settings for this and exactly what settings you want to use for percent R, as well as what some of the back tests look like. If you enjoyed this video, please click like. And if you want to see more videos like this, please subscribe to my channel. Just click the subscribe button. If you have any questions or comments, also please leave those in the comments below. And I look forward to seeing you in the next video.